You said that price, meaning the exchange rate, doesn't have that much effect or that much leverage when there are underlying structural factors, demand factors in the United States, deregulation factors. You didn't quite put it this way, but I'll put it this way. You're saying the exchange rate really doesn't matter, that it's overwhelmed by other factors.
That's correct. It's a bit player.
It's a bit player, even though the IMF, the World Trade Organization, others have in their bylaws that a country should not manipulate their exchange rate. So price doesn't matter?
They say should not manipulate their exchange rate for unfair trade advantage. If anybody has a fixed currency, they're manipulating. You have to intervene in your market to hold your currency at a stable rate, and you need that, particularly if you don't have a very good futures market, if you have fairly unsophisticated traders in a large economy. China has a very low per capita GDP. It has a long way to go before its financial sector is anywhere near Hong Kong's, and Hong Kong is way behind both New York and the City of London. So yes, and here's what you learned: supply and demand, right? And then you say, oh well, gosh, if it's a little out of line, but what if this one's going like this, or this one's going like this? Or they're vertical and moving up and down in ways that don't reflect price at all. That's what's happening in these days of enormous expansion of liquidity that was created. You saw the charts. The growth of dollar-denominated spending power, not because of government budget deficits, not because of monetary policy, because of deregulation at 50-to-1 leverage ratios that just poured money both into housing markets looking for a killing, and poured it overseas, and then got picked up by other countries and blown up. It was a house of cards built on a tiny base, and there's a special issue of the International Journal of Banking and Finance in which two papers in particular said, if it's an Asian savings glut that caused this, how come you didn't see such a big deficit just in the United States and not in so many other countries around the world? Or if you have surpluses in many countries all around the world and only one big deficit. Both of those observations point to one country as the source of this problem. And as I said, the Chinese surplus came late in the game. You can't put the exchange rate on the causal mechanism behind the huge deficit and the huge surpluses in those other countries. It just doesn't wash. So
Nick, Bert says it's not the causal mechanism, but does that mean it's not relevant at all? China has recirculated $2 trillion in funds, almost $1 trillion of them into U.S. Treasuries. That didn't help to create asset bubbles in the U.S.?
Well, let me start with the basic argument about whether or not the exchange rate matters. I happen to think the exchange rate is a very, very fundamental price in any economy, and particularly in China's economy. Most other prices have been liberalized. This is a very important price that is still should we say, rigidly controlled by the central government. Now, it is true in the short run, changes in income in China and abroad and the relative pace of growth of income and a lot of other variables can be quite important. But that does not obviate the fact that in the long run, the price of foreign exchange is a very important a price in an economy like China's, and it does influence the allocation of resources. We can see a very large increase in the share of investment going into tradable goods from roughly the middle of the last decade going forward, because profits went up so much in the export sector because the currency was undervalued. So I certainly think the exchange rate's a very important factor. I mean, the flip answer could be, if the exchange rate doesn't matter, why don't they appreciate 200% and the Congress would clap and it wouldn't affect anything, it doesn't matter, and we just go on. I mean, that's the flip answer to the argument that the price doesn't matter. Or pick some other number besides 200%, make it 50% or something. So I think the exchange rate does matter quite a bit.